Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHOW TAI FOOK interim report. CHOW TAI FOOK Jewelry Group Limited offers a diverse range of businesses and services, including jewelry manufacturing and sales under various brands such as CHOW TAI FOOK, HERTSON Fire, ENZO, Monologue, and SOINLOVE distribution of watches from various brands, trading of diamonds, provision of services, to franchisees' online sales through e-platforms, retail sales through physical stores. The skyrocketing stock price of CHOW TAI FOOK, a year of transformation and growth in the past year, CHOW TAI FOOK Jewelry Group's stock price has surged by a staggering 92.42%, driven by several key news events and strategic initiatives. The company's successful collaborations with popular intellectual properties, such as Black Myth, Wukong, have expanded its customer base and resonated with younger consumers. Additionally, the launch of recycled gold collections and sustainability goals has aligned with growing consumer demand for sustainable practices. The company's strong financial performance and sales growth, including an 11.2% increase in core profit margin and a 12.4% rise in retail sales, have also contributed to its stock price increase. Furthermore, the equity restructuring in December 2025 is expected to enhance the company's capital structure and unlock business value. These strategic initiatives, combined with the company's optimism for market recovery due to impending government economic stimulus policies, have outweighed macroeconomic challenges and led to the substantial rise in stock value. As a result, CHOW TAI FOOK Jewelry Group has emerged as a leader in the luxury market, poised for continued growth and success. The primary drivers of revenue growth for a company can be attributed to several key factors. The e-commerce business has seen significant growth, with a 27.6% year-over-year increase, driven by popular IP collaborations and a focused strategy to engage younger consumers. Additionally, the optimized product assortment has met the evolving interests of online customers, contributing to revenue growth. The revival in retail sentiment and foot traffic in Hong Kong and Macau has also positively impacted revenue, as well as robust performance in Southeast Asia. Furthermore, an increase in the average selling price, ASP, of fixed-price gold jewelry and strong sales of higher ticket size items for weight-based gold jewelry have contributed to revenue growth. On the other hand, the primary drivers of revenue decline include bricks-and-mortar stores, which declined by 0.5% in terms of retail sales value, RSV, as well as watches and gemset jewelry, which saw significant declines in same-store sales growth, SSSG. Jewelry trading and wholesale to franchisees/retailers have also experienced declines in revenue. Net income and profit margins underwent significant changes over the past few years. Initially, net income remained stable, with a year-on-year growth of 0.7%. However, it remained flat in the first half of FY 2026 compared to previous periods. Operating profit increased significantly by 50.6% to $110 million in 1H FY 2026. Profit margins also experienced fluctuations. Gross profit margin maintained above 30% for the first time in history and increased from 31.2% in 2023 to 35.5% in 1H FY 2026. Operating profit margin achieved a 5-year record high, with a 30 basis points expansion to 17.5%. However, it decreased from 14% in 2023 to 13.2% in 2025, before surging by 470 basis points to 16.3% in 1H FY 2026. The decline in net profit margin from 9.3% in 2023 to 6.5% in 2024, and its subsequent stagnation at 6.6% in 2025, indicates a decrease in profitability. The lack of data for 1H FY 2026's net profit margin prevents further analysis. The company's financial performance indicates a consistent trend of generating positive operating cash flows. The data from 2021 to 2024 shows a steady increase in operating cash flows, with notable amounts in 2023 and 2021. Additionally, the comparison between 2025 and 2024 reveals an upward trend, further confirming the company's ability to generate positive operating cash flow. The company's debt level has experienced significant fluctuations over the past few years. Initially, it increased significantly from 2022 to 2023, followed by a decrease of 42.1% from 2023 to 2024. However, this trend was short-lived, as the debt level surged by 86.2% from 2024 to 2025. The total borrowings and net debts also saw substantial increases during this period. In contrast, interest expenses have shown a more stable pattern. Although not explicitly stated until page 69, it is noted that interest expenses decreased by $125.7 million from 2024 to 2025. This decrease was largely driven by a decline in interest income from banks and an increase in finance costs on gold loans. Overall, the company's debt level has undergone significant changes, while its interest expenses have remained relatively stable. The company's financial performance varied across different regions and segments. Notably, Singapore and Malaysia saw significant improvements in same-store sales, SSS, by almost 30%. Hainan offshore duty-free stores also experienced a notable growth of 24.6% in revenue per square foot, RSV. Southeast Asia and Oceania showed promising signs with planned expansion and notable SSS improvement. In contrast, international markets failed to provide any information on their performance, indicating a lackluster showing. However, the domestic market demonstrated strong growth, utilizing HK3000, $332 million of net proceeds for its development and financing. Overall, the company's regional performance was mixed, with some areas excelling while others struggled. Management is outlining a two-pronged strategy for the company's growth. The plan involves expanding internationally by entering new markets such as Oceania, Canada, the Middle East, Southeast Asia, and revitalizing existing markets. This will be achieved through store upgrades, relocations, and additions to enhance retail experience, while also exploring high-potential new territories. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out interim dividends per share in various amounts over the years, with total dividends paid reaching HK3000, $194.9 million in 2025. Additionally, the company has also engaged in share buyback activities, canceling a significant number of shares worth HK1,000, $575.2 million in 2025. These actions demonstrate the company's commitment to returning value to its shareholders through both cash dividends and strategic share repurchases. Concerns about inventory buildup or supply chain disruption exist. The financial summary reveals a growing concern regarding inventory buildup and supply chain disruption. The data indicates that the company's inventory turnover period has significantly increased to 424 days in 2025, with inventories rising by $7.3 million. Furthermore, wholesale revenue declined by 10.2% due to network rationalization, leading to concerns about inventory management. The increase in finished goods and weight-based gold jewelry inventory balances, coupled with a substantial rise in turnover periods, exacerbates the issue. Specifically, the inventory balance for weight-based gold jewelry has increased by 16.4%, while its turnover period has risen by 86 days. These statistics suggest that the company is struggling to manage its inventory effectively, potentially leading to supply chain disruptions and decreased efficiency. The explicit acknowledgement of concerns about inventory buildup on page 70 further underscores the gravity of the situation. Overall, these findings indicate a pressing need for the company to reassess its inventory management strategies to mitigate potential risks and optimize operations. That concludes the financial summary for CHOW TAI FOOK. Feel free to comment below, and I will be happy to answer them when possible.